When we talk to policymakers, and we hear it from policymakers, the biggest threat to the U.S. Dominance and really the U.S. economy is the growing U.S. deficit. And we're on an unsustainable path. And I think almost everybody in markets agrees. And the numbers are staggering. And there is now a very ambitious effort to try to formulate some sort of plan to contain either the growth of government spending or even cut government spending, which is DOGE.
Tom Lee highlights concerns about the U.S. economy, focusing on the unsustainable deficit and efforts to address government spending, which could threaten economic dominance. Sean Pagan discusses the surge in AI innovation, particularly from smaller companies leveraging new models and algorithmic advances, shifting focus from scaling to software and application development. Dear Josa talks about the shift in generative AI from rapid model scaling to more practical applications, with smaller startups using open source models, challenging giants like Nvidia and creating new AI-driven solutions.
Is there any real fundamental reason that we're suddenly getting to a technical correction here?
Nothing that you've seen any headlines on or seen any reporting on. As you remember, Caroline, they've said we're sold out. Basically, their earnings are essentially a product of how much they can get from their suppliers right now. So nothing fundamentally that would give anybody any pause, but obviously, as you pointed out, a huge amount of money that has been poured into that stock.
It's up more than 100%, still 160% over the course of the year. We then flip to maybe a wannabe Nvidia in the making. Broadcom really signaled the total addressable market here for its designs within data centers, and the crowd went wild. Can you focus in on Broadcom and maybe a bit of profit taking on the day, but what do they have to do to make this a reality?
Yeah, I mean, they have to work really hard. I mean, what Hock Tan gave wasn't a sales target, right? We need to be careful about that. This kind of, as much as 90 billion that he was talking about was an addressable market for his type of chips, and that's by 2027. So what he was saying is, like, we have line of sight to a huge increase in what we do, but that pales in comparison to Nvidia, which is going to be 120 billion in data center sales alone this year, according to analysts.
And when it comes to just enticing different kind of investors on board, I mean, many were basically playing catch up to Nvidia for the last 2 years. Is there a slight FOMO trade here going on? Is that sort of what Hock Tan has to deal with, is that everyone's looking for the next Nvidia?
Yeah, I mean, that's absolutely part of it. And part of it might be, well, if you think about it, Broadcom's making chips, it's designing chips for the Googles and the Microsofts and companies like this, who are basically designing their own chips so that they don't have to buy as much from Nvidia. So there might be a kind of a switch trade here, but bear in mind that everybody who's been asked about this, mostly Hock Tan most recently, said, look, there's plenty of room for everybody. This is a massive growth opportunity. Yeah. Nobody's really taking anything away from anybody.
Very briefly, Qualcomm ARM, how big is this?
It's been sort of ignored. They need to settle, according to investors. Both of them need each other. This is something that is very strange, that they're on this collision course. Our analysis says they should be settling. They shouldn't be doing this. This is a jury trial, a lot at risk.
It is time for the final trade, but before we go around the horn, I just wanted to briefly say best of luck to my good friend Tyler Matheson, who is retiring from the anchor seat after 27 years at CNBC. It has been an honor to work alongside you.
Love you, Tyler.
Yes, what a great send-off that was today.
I was in tears.
Emotional,
I was honestly in tears.
He is a great man.
We'll miss you, Tyler. All right, around the horn we go. Mike Coe.
Yeah, healthcare is growing faster than the broad economy, but the sector is trading cheaper than the S&P. I think you could buy XLV.
Tim?
A tough time in the spirits space for Diageo, which is the global spirits leader. I think a brand that has got high brand power, and I think the top line's starting to grow again.
Karen?
Yes, I like the OIH, which is down for this year, but but some of the underlying stocks have made a lot of cash, so it's actually gotten even cheaper.
Steve?
Tyler, good luck, my friend. BTC, I'm bullish Bitcoin, and the way I played is grayscale minis. BTC.
Nvidia is down 10% since reporting strong third-quarter results, but CEO Jensen Huang warned of some near-term supply headwinds for Blackwell chips that could allow competitors like Broadcom to move in. My next guest also sees opportunities for rising players of a different kind in the AI space. So there's a paradigm shift from this brute force scaling to more efficiency and innovation. Joining me now is Chetan Puttagunta. He's general partner at legendary VC firm Benchmark, CNBC's Tech Check anchor Deirdre Bosa is with us as well. Chetan and Deirdre, it's great to have you both here. And Chetan, I would be really curious if it's getting more active in the VC world. You're starting to see kind of more smaller companies on the forefront of AI coming through the office. What's driving that? What kinds of things are they up to? And how might we expect them to affect kind of the AI world in the next 12 to 24 months' time?
Absolutely. Thank you for having me. As Benchmark, we're primarily focused on investing in seed and Series A companies. And in the last 6 to 8 weeks, we've seen a tremendous amount of innovation, especially at the model layer. And then for the last 2 years at the application layer, taking advantage of all the advances in the AI models. Specifically what's happening at the model layer is as we move into a inference time or a test time compute paradigm, you're seeing a lot more advantage to entrepreneurs and technical founders that are able to push to the frontier with algorithmic innovation. So for the last 2 years, a lot of this investment has been with billions and billions of dollars of CapEx and essentially scaling to get advantage on AI. And now we're starting to see a lot more on the algorithmic side.
Deirdre, build on this, if you will. What else are you hearing in terms of the shift that might be underway?
So I think to break it down, there's been two kind of major phases in the generative AI race. What Chetan's talking about is that pre-training or training phase where the technological advancements were sort of exponential. Each large language model, whether that be from ChatGPT, Gemini, Claude from Anthropic, they were getting exponentially better each time. But now there's sort of maybe an acceptance that we've hit the scaling laws. There's not enough data to continue the pace of these advancements. So it brings us to a second phase, which is post-training or inference. And this is very different. You can do more on the existing models, which is what I think Chetan is referring to. You get more applications. We start to look for those killer apps next year where we're building on use cases on the technology that is already out there. So in that sense, you see the focus go from hardware, Nvidia GPUs, to software and potentially, much smaller companies that are more investable for VCs versus mega caps with billions and millions of dollars on their balance sheet to invest in, a company that may be only 1 or 2 or 3 people building on top of the existing models and being able to do a lot more. Part of that too is, the rise of open source models like Meta's Llama. It enables entrepreneurs, new startup companies to sort of challenge the incumbents because they can get access to the frontier models in a very, specific vertical to compete and maybe even create a better product.
Chetan, can you give any examples of what you're seeing? And also, you mentioned that you're kind of a very early on stage investor, so it could be a while before these kind of companies hopefully come to market.
That's absolutely right. I think on the application layer, I'll give you a very specific example of a company named Sierra, where we were lucky to be involved in from the formation, led by former co-CEO of Salesforce, Brett Taylor. They started the company in early 2023, and what they're doing in terms of revolutionizing customer service for enterprises is simply remarkable. And so they're leveraging not only their own proprietary technology and models, but also open source models and also models from the latest model companies. And as a result, the applications that they're delivering are not just incrementally better than SaaS applications, it's a completely different experience. And what they're doing is not only consuming, software bits and making workflow more efficient, as was generally the trend in software for the last decade plus. What they're now doing is automating so much of the task itself that an enterprise could simply just say, we're going to outsource this entire function to this application, and the application not only makes the company better, but it also makes the underlying business much better, and the consumers that are dealing with that business now have a much better experience every day. So think of this Sierra AI agent, if you will, delivering the best customer service agent experience every time, replicated an infinite number of times. And that's an experience that was previously not possible without AI.
That's really interesting, especially as a customer experience skeptic myself. Jay, I know we have to, 15-second answer. I mean, he came from Salesforce. The street goes back and forth on whether SaaS is going to be totally disrupted by this or not. Is currently feeling kind of bullish on it, but it doesn't sound to me like you'd be very bullish on these existing software companies.
I think existing software companies have lock-in in the sense of like their data, but I think there's a ton of opportunity for these new startups like Sierra, like 11x, like LevelPath, and many others that are going after large incumbent markets with this AI-first approach. And they're being accepted and pulled by customers today, unlike we've ever seen in software over the last 2 decades.
And we know what that means.
Tom Lee discusses concerns about the U.S. economy, particularly the unsustainable deficit, which is prompting efforts to control government spending. Meanwhile, Sean Pagan notes that the venture capital world is seeing a surge in AI innovation, with smaller companies focused on applying AI models in practical ways, challenging larger players. Dear Josa highlights the shift from scaling AI models to developing applications, with open-source models enabling startups to compete with giants like Nvidia. The rise of AI startups is reshaping industries, particularly with companies like Sierra revolutionizing customer service. These innovations suggest that smaller companies will play a growing role in AI's future. How might government efforts to address the deficit impact the tech sector? What industries are most likely to benefit from the shift to AI applications?